Here is something the tax office will never say out loud. The rules are not the same for everyone. If you are 65 or older and you own your home, there is a very good chance you are paying more in property taxes than the law actually requires. Not hundreds of dollars more, in a lot of cases, thousands of dollars more every single year for as long as you own the house. And here's the part that stings. Nobody is going to call you about it. Your county does not send a letter that says, "Congratulations, you turned 65, here is your discount." These breaks almost never turn on by themselves. In most states, you have to apply, on paper, with the right form before a specific deadline. If you do not file, you do not get it. So people lose this money by default, not by mistake. The AARP Foundation estimates that more than 9.3 million older adults living on a limited income may qualify for money-saving property tax relief, but only about 8% actually apply. As one expert at the Lincoln Institute of Land Policy put it, a lot of seniors are either unaware of these programs or they miss the application deadlines. That is millions of people leaving real money on the table. Now, before we go further, do me one favor. Subscribe to this channel and tap the little bell. I am not saying that to pad my numbers. I am saying it because this stuff changes constantly. Here is how we are going to do this. I am going to sort every homeowner over 65 into 4 groups based on the kind of relief that fits your situation. Find your group and stay with me because one of these 4 could be worth more than almost any other money move you make this year. And keep listening all the way to the 4th group because there is a California rule that lets certain homeowners carry their low tax bill to a brand new house, and most people have no idea it exists. Group 1. Straight senior exemptions that cut the taxable value of your home. This is the most common kind and often the easiest to get. In Texas, as of the 2026 tax year, every homeowner gets $140,000 knocked off their home value for school taxes, and if you are 65 or older, you get another $60,000 on top for a combined $200,000. That came from ballot measures Texas voters approved in November of 2025, and the state comptroller calls it the largest homestead tax relief expansion in the state's history. You file Form 50-114 with your county appraisal district, and the standard deadline is April 30th. In Florida, if you are 65 and your household income is under a set limit, which for 2026 is $38,686, your county or city may give you an extra exemption of up to $50,000, and if you have lived in your home for 25 years or more, some counties will wipe out their entire share of your bill. You file with your county property appraiser, and the deadline is March 1st. In South Carolina, homeowners 65 and older get the first $50,000 of their home value completely exempt with no income limit at all, filed with your county auditor by July 15th. Georgia is huge for seniors because in many counties, people 62 and older get a break on school taxes, which is usually the biggest piece of the bill. And in Alabama, once you turn 65, you are exempt from the entire state portion of property tax no matter your income. And if your income is under $12,000, you can be exempt from county and school taxes too. So Group 1, the action step this week is simple. Call your county assessor or appraiser and ask, in these exact words, what senior exemptions am I not currently receiving? Group 2, assessment freezes and tax ceilings. This is different from Group 1, and this is the one people misunderstand the most. A freeze does not cut your value today, it locks it, so that when your neighborhood gets reassessed and everyone else watches their bill climb, yours stays put. Remember that Texas over 65 exemption I mentioned? It comes with a school tax ceiling that freezes your school taxes at the level of the year you turned 65, and it does not go up even if your home value doubles. Louisiana has a special assessment level freeze for homeowners 65 and up whose income is under a set cap, and it locks your assessed value for as long as you live there. Illinois has the Senior Citizens Assessment Freeze, which freezes your assessed value if your household income is under the limit, and that limit rises to $75,000 for the 2026 assessment year, filed every single year on Form PTAX 340. Arizona has the Senior Property Valuation Protection option for homeowners 65 and up who have lived in the home 2 years and meet an income test, and it freezes your value for 3 years at a time, filed on Form 82-104 by September 1st. Washington State has one of the most generous programs in the country with tiered relief based on your county's income limits that can freeze your value and cut your bill dramatically. The action step for Group 2. Ask your assessor whether your state has a senior freeze, and ask whether it is a one-time filing or something you have to renew. Group 3. Income-based credits and rebates. These are for homeowners on modest or fixed incomes, and they often put actual cash back in your pocket. Pennsylvania has the Property Tax and Rent Rebate Program, and it was expanded so the income limit is now $48,110, with a maximum rebate of $1,000. And remember, half of your Social Security does not even count toward that limit. You file on Form PA 1000, and the deadline for taxes paid in 2025 has been extended to December 31st. New York has enhanced STAR for homeowners 65 and up, with an income limit of $110,750 for the coming year. And starting in 2026, the state upgrades many seniors automatically, though you should confirm with your assessor. Michigan has a homestead property tax credit worth up to $1,900 if your total household resources are $71,500 or less claimed on your state tax return. Massachusetts has a senior circuit breaker credit worth up to $2,820 for 2025, claimed on Schedule CB, with income caps of $75,000 for a single filer and $112,000 for a married couple. Colorado gives qualifying seniors an exemption of 50% of the first $200,000 of their home value if they are 65 and have lived there 10 years, filed by July 15th. And New Jersey now combines 3 programs, Anchor, the Senior Freeze, and Stay in J, into a single application called the PAS-1, due November 2nd. The action step for Group 3. Look up your state's circuit breaker or rebate program and check the income limit, because these limits are almost always higher than you think, and many of them do not fully count your Social Security. Group 4. Deferral programs and the moving trick I promised you. A deferral lets you postpone your property taxes entirely as a loan against your home that gets paid back when you sell or pass away. California has the Property Tax Postponement Program for homeowners 62 and up, with an income limit and a 7% interest rate. Texas lets homeowners 65 and up defer their taxes at just 5% interest by filing one affidavit. Oregon and Washington have their own deferral programs too. Just understand the trade-off. Deferred taxes plus interest come out of your home's value later, so this is a tool for staying in your home, not a free ride, and your heirs inherit that balance. Now here is that California rule. Under Proposition 19, if you are 55 or older, you can sell your home and carry your old, low property tax bill to a new home anywhere in California, up to 3 times in your life, even if the new home costs more. For someone who bought decades ago, that can mean paying tax as if it were still the old days on a brand new house. The action step for Group 4. If cash flow is tight, ask your county about deferral. And if you are in California and thinking about moving, look up Proposition 19 before you list. So here's the summary by group. Group 1. Senior exemptions that cut your taxable value, like Texas, Florida, South Carolina, Georgia, and Alabama. Group 2. Freezes and ceilings that lock your bill in place, like Texas, Louisiana, Illinois, Arizona, and Washington. Group 3. Income-based credits and rebates that hand you cash, like Pennsylvania, New York, Michigan, Massachusetts, Colorado, and New Jersey. Group 4. Deferrals that postpone the bill, plus the California Proposition 19 move for people who are relocating. and one rule that cuts across all of them. These are almost never automatic, and most states will not let you claim them very far back. So a missed deadline usually means a whole year of savings gone. Texas is a little more forgiving and lets seniors file late for the over 65 exemption for up to 2 years, but do not count on that in your state. One more thing worth knowing. In Texas, a surviving spouse who is at least 55 gets to keep the tax ceiling when their partner passes away. Rules like that exist in many states, so if you have lost a spouse, always ask. The single most valuable thing you can do this week is pick up the phone, call your county assessor, and ask what you qualify for, and verify every number for your own county, because these programs vary a lot from place to place. It is a free call, and it could save you thousands. If this helped you, subscribe, and please share it with someone you know who owns a home and is 65 or older, because there is a real chance they are overpaying right now and have no idea. Take care, and I will see you in the next one.